It's Mike Metz, your jumbo low down payment expert. All right, so we've had a pretty good series. We've talked about the 5% down. We've talked about your credit score. We've talked about your debt to income ratio. So now let's talk about getting a little bit more, I don't want to say over in the weeds, but some of the other fine print, if you will, on these type of loans. One question I get quite common is, hey Mike, can I get a gift for the down payment? My 5% down, can I get that from my mom or my dad, a relative or something? The answer is yes. So it's a great program. I mean, if you're blessed and you have a family member that will gift you the 5% down, then that can be used as your down payment. 5%, you do not have to have any of your own money in the deal. So that's really neat. Now, what won't work though is you've got a friend that wants to loan you some money, somebody from back in college maybe that still owed you some money, something like that. That's not going to work. It must be a blood relative. And so by that, it must be someone, an uncle, an aunt, somebody that we can trace it back to that's a relative of yours, and they're willing to gift you this money. It's a gift to you. It's not a scheduled loan where we have to count a payment against you or anything. This is an actual gift. So 5% down, gifts allowed with it. Now, the other item that we have, and sometimes this can be a challenge, is the post-closing reserves. So by that, as a lender, we're going to say the 5% down will lend you up to $1.5 million with that. But after the loan closes, we want to see that you have a little money left over, call it as a cushion, if you will, in case you fell on hard times. This money does need to be your own money. So I can't have rich Uncle Louie put a bunch of money in your account right before closing, and we're going to call that your gift funds. Not your gift funds, excuse me, your reserve funds. That won't work out. So what we need to do is you need to have 12 months of monthly payments left over after closing. And this needs to be in some type of account. Now, the most common account is a 401k, retirement account, savings account, any type of accounts that you have. And let me kind of give you an example. Assuming your monthly payment's going to be $5,000 a month, you would need 12 months reserves. 12 times 5 equals $60,000. We'd need to see $60,000 in an account in your name left over after closing. Now, we're not going to touch it. We're not going to go ahead and somehow encumber that money. We just want to see 2-month statements that you do have that money that you could fall back on in case of hard times. Now, one instance that I had recently, the girl on the loan, she was a joint account with her mother. It was great. It had a lot of money in it. Her mother was a little older, so her mother had put her on her account with her, and we were able to use that as reserves. Again, we're not going to touch the account. There are ways in order to establish reserve accounts, but it does take a little bit of time, or what we call season. So maybe you do need to be added onto a family member's account that we use as reserve. Maybe a family member wants to give you the money, but they don't want to add you to an account. There's ways that we can work around that also. So keep in mind, it's more than one size fits all. We can definitely make it work, but we need a lot of times just talk through it. 12 months though, reserve, if you're putting 5% down. If you're putting 10% down, I only need 6 months reserve, so that's a little bit better. So to recap, 5% down jumbo loan up to $1.5 million. I can do a gift for the entire 5%. After closing, I need to see that you still have money left over called post-closing reserves, and that's going to amount to 12 months worth of monthly payments. Folks, I really appreciate you tuning in. If you do me a favor and smash that subscribe button, it'd really help me out. Thanks a lot.